In this episode, I'm going to share with you the 3 steps that I took that made reading level 2 easier. When I got started, I found it very difficult to understand what was going on when I was reading level 2. The numbers are moving like crazy. I didn't know what to look at. And I had a really hard time kind of connecting the change in the numbers from what was happening in the market and certainly what was going to happen next. But ultimately, I've now gotten to a point where I've gotten really good at reading the tape, so much so that I would say level 2 and tape reading give me an edge as a trader, and I could not trade without them. To help you get better at reading the tape, I'm gonna walk you through the steps that you can take right now in your own trading. As always, the goal of these classes is to support you in your journey of learning how to become a trader. So I hope you hit that thumbs up. I hope you subscribe to the channel, and let's go ahead and dive right in. So I've got the S&P 500 up here, but we could just as easily look at Bitcoin. We could look at a futures commodity like gold or natural gas. We could look at an individual stock. It doesn't matter. One of the things that's kind of interesting is that when I first started trading, I had 2 different brokers that I was kind of trying to figure out which one I preferred, E-Trade and Thinkorswim. And Thinkorswim continues to have a terrible default way of displaying level 2. It's almost boggles my mind that they haven't done anything to make it better in more than a decade. But E-Trade by default has a much cleaner display for the level 2 data, which means you can visualize market depth better. And so I would probably attribute part of the reason that I was able to pick up learning how to read the tape and read level 2 earlier was because of the default setting of E-Trade. So I'm going to help you kind of set up your level 2 in a similar way so it's easier for you to read. Okay, so in the background here, these are my charts. These are my scanners. This is the platform that I built out. I have a development team that built this out for me. This is available for Warrior Pro members. This right here is a brokerage account, and this is a very standard kind of presentation of level 2 data. What you're seeing is the depth of the market. Now, if you pulled up just a quote on, I don't know, on the internet or something for a stock, what you would typically actually see is just the last price. You would only see the last price. But what you might see for level 1 data is the best bid and the best offer. So that would be 505.20 by 505.21, right? This is the bid and this is the offer. Now, for those of you guys that need a crash course on level 2 is the depth of the market. Level 1 is just the first tier, the first row, essentially, which is showing us the market maker. So NSDQ, for instance, for NASDAQ, price $505.21, order size, let's say 600 shares. And then that's the highest price buyer. Okay, now the lowest price seller, let's just say NSDQ, also on NASDAQ, price 505.22, size 600 shares. All right, so this has a 1 cent spread between the best buyer and the lowest price seller. Now, for those that aren't totally familiar with the way market dynamics work, when you have someone here who posts an order to sell shares, they post an order to sell their shares, 600, at 505.22. Now, if they really wanted to get out, they could just sell 600 shares to this buyer right here at 505.21. Why wouldn't they do that? Who cares about 1 cent? There's 2 primary reasons that someone might choose not to do that. The first is because, well, they actually are selling a bigger position than just the 600 shares, and they're doing what's called an iceberg order, where it appears to be 600, but it's actually a much bigger order there. And so they're just going to keep letting people buy shares from them to slowly sell all those shares that are part of the iceberg. And they know that if they sold on the bid, since they're selling more than 600 shares, they would have to keep searching for the next buyer, which might be 505.18, 505.15, and so on and so forth. So if they press the sell button, they would end up getting filled at a lower price. So they're just going to sit here on the offer and wait for people to come and buy their shares. So number 1, the possibility of why you would sell on the ask is because you've got a huge order and you don't want to hit the bid. You may or may not have an iceberg. Number 2 is when you sell on the offer, if you are an institutional trader or you're a professional trader using direct access software, you actually get paid a little bit of money from the exchanges. The exchanges, NASDAQ, will actually pay you for trading as long as you execute your order by sitting and waiting. So if you put your order to sell on the offer and you sit and wait for it to get filled, you'll actually make a little bit of money. Now, the amount of money you make is about it's about a 15th of a penny. It's not much, to be honest. On 10,000 shares, you'd make 15 bucks. So it really doesn't add up in a big way, but for institutional traders who are trading millions of shares a day, that can add up. And that's the same with those direct access brokers, where if you buy, but you put your order on the bid and wait for someone to sell you shares, you would again make about a 15th of a penny. So again, it's a relatively small amount of money, but those are two reasons why people might sell on the ask instead of just hit the bid. And I guess maybe the third reason would be just simply to get the very best price possible. Although to get this best price, you have to be patient, because right now there's a buyer at 505.21 who is happy to buy your shares. So you could just sell to him and be out. Yeah, it costs you 1 penny, but you get an instant exit. Okay, so regardless, however you decide you want to route your orders, this is what we're looking at when we look at level 2. We're seeing the market makers, the price, the share size on the bid. Market maker, price, share size on the offer. But level 1 is just that the first depth of the market. Level 1 is the first row. And level 2, we call it level 2, and some people call it market depth because it just shows you all of the depth of the market. And you could scroll this down and you could change your settings so you see even more orders in here if you wanted to. But one of the problems that I have is that when it's all a blue background like this, or whatever the color background is, it's very hard to sort of differentiate what's happening. So right now, I'm seeing all of this is moving around. NASDAQ, ARCA, BATS, these are all moving around. The prices are moving around. The sizes are moving around. Like, this feels very jumbled. So the first thing that I want to do is I want to color each one of these rows based on the prices. So what we're going to do is we're going to go into our settings. We're going to go to design. We're going to go to the layout. And I'm going to change this. So I'm going to actually copy and paste the color here. I already had this ready to go, so it's all set up for me. I'm going to make it just a little bit brighter. And then I'm going to do the same thing here. Copy, paste. I'm going to change this here like that. Make it just a little bit brighter. Make it pop. And then we're going to do the same thing here. Copy, paste. Oops, that's fine. Turn that off. There we go. And we're going to do it for this tier as well. We're going to copy, paste the color. And this is going to make a huge difference when we save this setting and we open it up. All right, and I'll just make that just a smidge brighter. So now watch this. Wow. Wow. Now we're really looking at something very different, right? Am I right? So I'm just going to do a screen grab here, just like this, just to sort of pause the screen for a moment. Okay. So what are we working with here? What you're seeing is the way this is coloring is the first level is green. The first level, the first depth of the market is green. So what does everything in green have in common? These are all at the same price, and these are all at the same price. The next level down, which is the second level, is all in red. So these all show, and you could choose any colors you want, but just important to differentiate them. So instead of it all being the same, you can separate how many buyers are at the first tier and how many sellers are at the first tier, because this is an instant reflection of supply and demand and whether or not there are more buyers or there are more sellers, right? This is showing us the balance of the market. This is the depth of the market. So by coloring it, now I can immediately see that we actually have more sellers right here in this moment than we have buyers. Now, if I pulled up my chart and I saw a bearish chart pattern on the candlestick charts, then this would be reaffirming what I'm already seeing on the chart. It's important to note that level 2 by itself is never going to be an indicator to buy or sell. Level 2 works in conjunction with already having a candlestick pattern that you're dialed in on, that you like, and making sure, obviously, that you're trading a security or an instrument that you like that is worth focusing on. So if you're curious about my process of stock selection, I have other episodes that focus on that. But when it comes to reading level 2, the first step is to change the coloring. So by changing the coloring now, this is much easier to read. And again, we could scroll this, open this up a little bit more, pull it down. Oops, sorry. So we'll just click here, drag it down. And now you see each of these tiers. Now, when we're further away from the first top 3 tiers, it's okay if all of those are just the same color. That I don't really care about as much, but I really want to see and be able to differentiate on the very top, because this shows me the stacks of the buyers and the sellers. And although it is moving very quickly and it may be hard for you to kind of understand what's happening, this is going to be the way you'll want to visualize it. But we still have a problem. These numbers, they're moving around, but there's a little bit of a lack of context. And the lack of context that we have right now is it's not clear, like, are any orders actually being placed? Is anyone even buying or selling? Or are these just orders, are they just moving like, automatically or somehow magically from some algorithm? The only clue we have is that we could see the volume is increasing right here. But what I think is critically important is to pair your level 2 window with a time and sales window. By pairing it with a time and sales window, now you're seeing actual orders that are going through the market. And these orders that are going through the market are what's actually creating the changes on the level 2. So what I'm looking at, what my eye is always looking at, is the ask price right here. This is where my eye is always focused, right here, the top, the very top of level 2 on the ask. And then I'm glancing here in my peripheral vision, I can clearly see these swaths of red and green. What I know is that when we see red going through, those are transactions that are occurring at the bid price. Those are people who are actively selling to buyers on the bid. Now remember, whenever there's a seller, someone's buying those shares. Whenever there's a buyer, someone's selling those shares, but it's colored red or green based on what price the transaction occurs at. Green are orders that occur on the offer. Red are orders that occur on the bid. White are orders that occur between the spread. So with my eye right here, we're seeing this popping up right here. Just we had a little burst of green and we're seeing it kind of surging up. Now, as we came up here, up to this level, now we're seeing some bursts of selling going through. But there's a little bit more buying right there. Another little burst of buying. And so this is now sort of putting two pieces together. If you're looking at just the time and sales, just the tape, without the level 2, well, this is historical in a sense. It's only showing you what has already happened. So these are prints that have just gone through. The level 2 isn't showing you the past. It's showing you the current orders, which helps you understand the imbalance between supply and demand and where the market is going. So these two couple together very nicely, and really they're inseparable. They have to be viewed together. Because this now, let's just say, for instance, that we were seeing a ton of green here, but the price was not moving up. What would that tell us? That would tell us that there's an iceberg order. There's a hidden seller. Someone is unloading a lot of shares. People are buying, but the price isn't breaking. So this would be especially notable if we saw only 600 shares being displayed, but then on the tape, on the level 2, or on the time and sales, we had just seen 100,000 shares of buy orders go through. That's the sure sign that there's a hidden seller right here. You would never be able to visualize hidden buyers or hidden sellers if you do not also have the time and sales. You have to have them together to be able to see this. If you have just the time and sales, you'll have no idea there's a hidden buyer or seller. If you have just the level 2, you won't be able to see it either. You need them both. So they're separate windows, but they should really be paired in one window because you really can never view one, in my opinion, without the other. So your first step is to change the coloring so you can better visualize the imbalance between the buyers and the sellers. These are buyers on the left, these are sellers on the right. So when we have a lot of sellers and we're super heavy on the sell side, that's something I take note of. If I see very large sell orders here on the order size, that's something I take note of. And I'm always looking for hidden sellers. So sometimes, just as like for fun, I'll try staring just at the bid and not looking at this like at all. And it's impossible. I cannot do it. I almost like lose my frame of reference. I'm so trained just to look at the offer here. So we're at 77, 79. Now I glance here and see 78. Okay, so what does that tell me? We've got like a 2-point spread, 1-point spread. I check it to see how tight the spreads are. I'll check it to see, oh, it's stacked up or it's thinned out. I glance at it. But this to me is almost like the windshield looking out the front of a car while I'm driving. And this, to be honest, is my rear view mirror because it's telling me what's just happened. And this, I just glance at out the side of the window just to see, like I'm just glancing, but this is really what I'm looking at. Now, in part, this is because I'm a long bias trader and I'm focusing on the price moving higher. If I was a short bias trader, maybe I could see focusing here and glancing here, but I'm not a short bias trader. I'm a long bias trader. So I focus on the offer. I check the spread. I check to see if there's big orders. And if I don't see, anything concerning, then I'm interested in taking the trade. But it's also really important to remember that this level 2 is going to be moving around like this. Well, it's 11:15. So it's going to be moving around like this for the next 5 hours. It doesn't matter what the chart looks like. It's going to be moving around. But when we actually pull up the chart, we'll see that, oh, well, this isn't really anything all that interesting. This is the S&P 500 after all. It's just such a big index. Its price action becomes often very choppy. It just trends with the overall market. It's very hard, in other words, to day trade it. Whereas if we pulled up an individual stock, this one's not really doing too much. What about this one? NVIF. Let's look at this individual stock that's moving higher. So NVIF, NIVF, sorry. We're looking at the chart here. Okay, so we see that the price is moving higher. We look at the 5-minute chart. We got 1, 2, 3, 4, nearly 5 green candles in a row. I would wager that this is starting to get a little extended up here. So I may now be starting to think, is this getting top heavy and will it roll over? Where is it going to run into resistance? Well, one of the things that we know about stocks based on our understanding of technical analysis and candlestick chart patterns is that we typically find resistance around $0.50 and whole dollars. So as this stock approaches $3, it would be very common for there to be a lot of sell orders stacked against that level. Just psychologically, people will buy a stock like this at $1.50, $2. They're like, oh, I'll just put my order at $3 to sell. Hey, if it goes to 3, I'll take profit. And so you have a whole bunch of sell orders right at that level. So now as we approach it, we watch the level 2. See how a sell order just came in there and it sort of knocked it back down? Sell order there at 93. That sell order got bought up, goes to 94, goes to 95, and then another burst of selling. So what we're seeing up here, the level 2 is showing us that we're kind of churning a little bit. We buy and then we sell. We buy and then we sell. And this type of churning behavior is common when the price is approaching an area of resistance. It's a little bit of a battle right now. I don't really like to be trading when there's a battle. I'd rather be trading when it's very clear who's in control. The bulls, right? Now, because I'm a long bias trader, a short bias trader would feel the opposite. So right there, the bears took control. We saw that big burst of red on the level 2, right? We dropped down 10 cents, but it was predictable that that was about to happen. Predictable because we were near the whole dollar of 3. predictable because of the way that level 2 was churning right at that critical resistance level. And you could see how what I was seeing there was enough easily for me to say, I'm not going to take that position. So I would ask you, would you have considered buying there? Would you have gotten in at 295 maybe for the break of 3? If you had, you'd be down 20 cents here, 25 on the bid when it dropped to 70. And I think this is a moment that exemplifies the value of having a mentor who's got a lot of experience. Because when I'm streaming for our Warrior Pro members, you guys are able to listen over my shoulder, hear my commentary, and I speak out loud the things I'm seeing. So I'll say, I'm seeing this churning. I feel like this is heavy. And it gives you the chance to kind of piggyback off of all of my experience. It doesn't mean I'm right 100% of the time. I have losing trades just like anyone else. This is $12.6 million of profit here. And for what it's worth, I'm wrong 31% of the time. That's my accuracy. 68% profitable, 32% wrong. Okay. So I'm not right 100% of the time, but obviously I'm right more often than I'm wrong. And it's a combination of, I would say, a tremendous amount of experience, which has created what I would call educated intuition. Educated intuition is that moment that I just had there where I was able to say, I feel like this isn't going to work. That feeling, it's a gut feeling, but it's not just, a gut feeling that doesn't have anything supporting it. If I was, I don't know, I'm just thinking like if you were in a combat situation, I would want to trust the gut feeling of someone who's been in combat for 15 years or something, who's got a lot of experience. I don't know, that's a long time to be in combat, but you get the idea. I would trust their intuition a whole heck of a lot more than I would trust mine. But in the market, you want to be able to have someone that has a lot of experience, because this is all moving so quickly. It's difficult as a beginner to process everything that's happening and to be able to make the right decisions in real time. Those who are able to do it, however, will be those who find the most success. So it's certainly something to strive for. So now we look at this chart and we see, all right, well, we've got 1, 2, 3, 4 green candles in a row moving up. The 1 minute chart, moved up, pulled back, moved up, dropped back down. And at this point, I would say we need to wait for a brand new pattern, a 5-minute pattern. Now, this gave you a 5-minute pattern right here. It had to move up, 5-minute pattern, and then it gave that next leg higher. So we would want to see the same thing happen here. So for the next 15, 20 minutes, the level 2, I'm not even looking at it anymore. The level 2, I'm only pulling up when I'm about to take a trade. That's also important. There are some people that get sucked into reading level 2 all day long, but it's really only valid and worth looking at in the moments when the chart is supporting an entry. Trying to trade, like I said, S&P 500, you could pull up the S&P 500, you could look at the level 2 all day long, and you could get faked out into thinking, oh, I should get in here, I should get out there, oh, it's going to break this level, it's going to break that level. But if the chart pattern isn't showing anything that kind of helps you establish a low risk entry, buying just based on the level 2 is not going to work. However, if you see a pattern that you like, the level 2 can help you rule out whether or not it's actually worth trading. So for me, I would not trade without using level 2 because it does give me an edge. I'm able to see, for instance, let's say when this came up to $3. Let's just say for instance, let's just say there was a 500,000 share buyer that showed up on the level 2 at 291. I would look at that and I'd think, whoa, there's a huge buyer on this. Such a big buyer that they're creating bid support. They're creating support by being such a large order. Now, in that case, I might feel differently about the potential break over 3. Or as it came up to 3, if I saw that 500,000 share seller at 3, I would say, well, geez, clearly we've got a huge seller there. And now that I know that seller's there, the 5-minute pattern probably will not work out as well, because when it comes back up, that seller's still going to be there, right? So the level 2 will give you an edge once you learn how to read it correctly. The biggest thing for me, number 1, was changing the color, learning to have the tape be right next to the level 2, and learning where to look. So obviously you're not supposed to look at the very bottom down here. That's useless. You don't need to look at the middle so much. It takes a while, but I trained my eye to look right here, glancing at the tape in my peripheral vision and glancing at the bid to check the spread and to check to see if there's any big buyers. But the big buyers are somewhat noticeable because when they pop up, you'll see usually the numbers are bigger because the size is larger, so it's easier to see. So now you know the 3 steps that I took that made reading level 2 easier. If you want a deep dive into how to read the tape and read level 2, I'll put that episode right here. And as always, if you found this interesting, I hope you hit that thumbs up and I hope you subscribe to the channel for more episodes on trading strategy, technical analysis, and becoming a better trader. That's what this channel is all about. I'll see you for the next episode real soon. And I want to remind you, as always, that trading is risky. My results aren't typical, so manage your risk and take it slow.